welcome back. So this is the part of course where we touch upon indicators. So if you don't know what indicators are little tools or analysis tools that are done by the computer that help us as traders uh, predict or guess when we should enter trades and where or price is expected to reach. So if you don't know what indicators are, if you have traded view this whole FX thing up here on the top, click on it and this is how you choose your indicators. There's multiple different indicators. There's about hundreds of indicators. But the main ones that as beginners tend to use is RSI and moving averages. RSI residual strength index and MAs, which are moving averages. So moving averages is this blue line, RSI is this purple thing. We also tend to use MACD, but that's a bit of a that one's a gold one. I don't think we should be sharing this for free because some of this information I'm giving you is worth some money. I'm not gonna lie. So RSI, so RSI is a momentum indicator which tells you when the market has momentum, whether it's bullish or bearish. So, for example, here the market is showing bearish momentum, rejection from this level right here. You can clearly see. And what we can see here is that because the RSI exceeded the purple zone, we could clearly tell that there's not much momentum left in the market and price is eventually going to take a downturn, come back down. It's very useful. It's very useful. So let's say you enter in this trade and you saw that price action has is slowing down. You can clearly see the slowdown of bullish momentum, a few wick rejections, and you see RSI, showing that it left the purple zone. That's an indication that you are about to lose this trade. There's price is not really going to reach or take profit anytime soon. If anything, it's going to reach your stop loss. I mean, in this case, it probably would have reached your stop loss already. So that's what it could be useful. On the other hand, if you are a bear of the market, you can literally just base your strategy of RSI. The minute RSI shows this, the loss of momentum and come back down, so around this level here, you could literally enter the short trade. You'd have gone for a 1 to 3 risk reward ratio because the RSI. I mean, obviously, you put a few pips over the wick, 1 to 3, and boom, there you have it. 40 pips, an easy 40 pips just from RSI. That's just one example. It's not always going to work, obviously. Like this is an example where RSI flops, and this is what I'm saying to you about indicators. You need to find confluence. Indicators are useless on their own, very, very useless on their own. I mean, look here, fantastic indication that there's not much bearish momentum left in the market. Market took an upturn, but then again, you look here and you see this or this, but it really didn't affect the market. It continued with its bullish trend. And this is why I'm telling you confluence is key. I keep telling you this confluence is key. These five multiple factors that tell you where price action, whether it's price action, trend line, support, resistance, I don't care what the hell you're using. You just find confluence to help you. Secondly, second most common one is EMA. So I hopped into plus 500 because TradingView does not support more than one EMA at a time. I've used 3 MEAs, purple, green, blue, purple, period 8, green, period 13, and blue, period 21. So you use these 3 indicators, and whenever you see the indicators cross over, the shortest period one on top, the longest period one on the bottom, that's what tells you you should enter a trade, whether it's long position or short position. And when it's the other way around, when the blue's on top and purple's on the bottom, tells you to enter a short position. So for example, like here, the EMA is crossed over and so it's literally just just something to help you, to give you confidence, confluence as well, confidence and confluence. But it's useless on its own. I think don't enter trades if you're not using it. There's other indicators. There's a lot of nice indicators. Bollinger Bands, RSI and Bollinger Bands are very good for mobile strategies, mobile trading. But I don't really do that. I like looking at price action on a big screen. Um, Analyzing price action. I mean, it could work for PC as well, but it's just I'd rather use a big screen and analyze price action, analyze candles. Yeah, and at the end of the day, for me personally, my favorite indicators are my eyes. Literally, my eyes. Price action is my favorite indicator. I can literally look at price action and tell you, oh, rejection, multiple doji candles, shows strong rejection of this level. Price taking downturn, da da da. Literally, I think this is Fibonacci worthy. Just by looking at the candles, boom. Literally, like without price action, without candlesticks, without your eyes, you wouldn't be able to do it. So I'm saying confidence is key. But these are what indicators are. I mean, I think you should just serve the internet for whatever indicators you think is best and implement it. For me personally, it's MACD, but I'm not going to get into too much information because MACD is a gem. Personally, I think it's a gem. It is the most effective, but then again, I don't like giving that type of information for free, if you know what I'm saying. Anyway, but yeah, make sure you practice using indicators, backtest them, and only use them on forex markets because they're useless on stocks. Very useless. I mean, they can be, but yeah. Anyway, that being said, let's move on.